Welcome back, my friends. Well, it finally happened. After losing almost 70% of the value of their investment in the past year, Meta shareholders are getting restless. There is news today that Altimeter Capital Chair and CEO Brad Gerstner is speaking out about Meta. Gerstner said, "Meta has too many employees and is moving too slowly to retain the confidence of investors." Gerstner wrote this in an open letter to the management of the company. Think about it. How would you feel if you owned Meta shares over the past year? This day was coming, whether we all want to admit it or not. Meta has reported 2 consecutive quarters of declining revenue. And they might be reporting another decline in Q3, we will see. Meta went from a high-growth tech giant to a company in decline in less than 1 year. And it seems as if its CEO, Mark Zuckerberg, does not have confidence that the company's traditional market can get Meta back to growth. Instead, he seems intent on betting the company on an entirely new market, the Metaverse. And that may turn out to be an eventual success. But it is far from guaranteed. Meanwhile, Meta is losing billions every quarter to develop the Metaverse. And shareholders are understandably getting restless. Now that Altimeter Capital has spoken out, others might not be far behind. This could be about to get ugly. Or interesting, depending on your perspective. This video takes a closer look at the message from Altimeter Capital and its potential impact on Meta. The Metaverse is something of a squishy concept at the moment, and it has divided expert opinions. Zuckerberg has all but said that layoffs are in the future for Meta. So what does this mean for the Meta and the Metaverse? What does this mean for other big tech companies? What does this mean for the US economy? And what does this mean for the future of the United States? But, before we get into all of that, please hit the like button and leave us a comment below. We would love to hear from you. Please subscribe and hit the bell icon so that you are notified when new videos are released. None other than Altimeter Capital Chairman and CEO Brad Gerstner wrote an open letter to Meta CEO Mark Zuckerberg. Meta has too many employees and is moving too slowly to retain the confidence of investors, Gerstner said in the letter. "I recommend a plan to get the company's mojo back," Gerstner continued. "My plan includes reducing headcount expenses by 20%, Gerstner added. It also includes limiting the company's pricey investments in Metaverse technology, VR software and hardware, to no more than $5 billion per year, Gerstner also added. Meta needs to rebuild confidence with investors, employees and the tech community in order to attract, inspire, and retain the best people in the world, Gerstner wrote in the letter. In short, Meta needs to get fit and focused, Gerstner noted in the letter. The letter to the company is just the latest sign that Meta shareholders are uncomfortable. Shareholders have reservations about the company's direction and recent performance. And this restlessness is now starting to spill out into the public. Shares in Meta are down over 61% in 2022 so far and over 70% in the past 12 months. Altimeter Capital held over 2 million Meta shares as of June 30th. The letter from Altimeter is a vote of no confidence in Meta company strategy. And it is fair to say that Altimeter is not sold over on virtual and augmented reality. If you recall, Meta rebranded from Facebook last year. CEO Mark Zuckerberg said at the time that the new branding would enable better focus on its virtual reality hardware and software. Since then, Meta has been spending $10 billion every year on the Metaverse. Meta announced a new high-end virtual reality headset called the Quest Pro. But Meta's Metaverse apps do not seem to be garnering subscribers, at least not yet. Horizon Worlds, the main Metaverse world, is pretty much a ghost town. In addition, people are confused by what the Metaverse even means, Gerstner wrote. If the company were investing $1 billion or $2 billion per year into this project, then that confusion might not even be a problem, Gerstner continued in the letter. The estimated fortune that the company is currently spending to develop VR could take a decade to come to fruition, Gerstner also noted in his letter. An estimated $100 billion investment in an unknown future is supersized and terrifying, even by Silicon Valley standards, Gerstner wrote. Ultimately, Gerstner thinks that Meta has too many employees. These employees are paid too much and Meta has too many capital expenditures. If Meta was able to control those costs, then it could double its free cash flow and improve its share price, said Gerstner in his letter. A 20% cut in employee spending would take Meta back to the levels of staffing it had last year, Gerstner noted. And the company can't spend as it used to since the cost of capital and interest rates have risen recently, Gerstner continued. Altimeter Capital does not have demands and simply wants to engage with Meta management, the letter said. Not surprisingly, Meta did not make a spokesperson available for comment. But far from being a bad decision, we think the recommendations outlined above will lead to a leaner, more productive, and more focused company. A company that regains its confidence and momentum, Gerstner wrote. The poor leadership skills of Mark Zuckerberg are slowly dragging Meta toward disaster, claims a new report published by Harvard senior fellow Bill George. Zuckerberg's inabilities as CEO are continuing to derail Meta, which recently renamed itself from Facebook. I think Facebook is not going to do well as long as he's there, George said in the report. He is likely one of the reasons so many people are turning away from the company. He's really lost his way, the report continued. Zuckerberg was the driving force behind Facebook's meteoric growth up until now. He grew Facebook into a tech giant with a $450 billion market capitalization. Zuckerberg was a pioneer and creator of what has come to be known as the social media industry, practically willing it into existence. Now he is trying to do the same thing with the metaverse. Throughout its history, Meta stock has rebounded after stock dips, scandal and controversy. Meta stock dropped by a stunning $232 billion in February of 2022. Zuckerberg and his lieutenants rationalized and blamed the results on a number of factors. He blamed changes to the Apple privacy policy. He blamed competition from TikTok. But Meta also spent heavily on research and development for the metaverse. The metaverse is all about virtual reality. And the virtual reality division of Meta lost $10 billion in 2021 alone. And it lost $2.8 billion just in Q2 of 2022. Meta is investing heavily into the development of the metaverse. That investment may eventually pay off in an even bigger way than Facebook did. Certainly, Meta is not the only company to see a bright future in virtual reality. And, virtual reality headsets are a key access item for the metaverse. Currently, Meta is the world leader in sales and development of virtual reality headsets. And Meta just doubled down on new custom semiconductor chips for its next generation of virtual reality headsets. One goal of the metaverse is to have people working and gaming in digital worlds. Apple and Samsung are also competing in the extended reality space. VR headset users can place themselves into virtual worlds working, studying, gaming and collaborating. Meta Platforms is the current market leader with over 90% of all sales in the VR headset space in 2022. The VR software revenue is forecast to reach $5.5 billion in revenue by 2027. Revenue growth of 15% is forecast through 2030. But, what do you think? Please hit the like button and leave us a comment below. We would love to hear from you. Please subscribe and hit the bell icon so that you are notified when new videos are released. Please share this video on social media. Thank you for watching.